Hello, everyone. Hello. Welcome. Yes, we still have a few people streaming in, but we can just get started with some admin issues. So today we are going to talk about create your own day trading system. It's a step-by-step guide by Alex Kozulin, the creator of DTP. He created DTP some years back and it's still working for him. And he'll tell you exactly how what questions need to be answered, what's the process which he used to create this winning trading system. So let's get on with it. First off, some administration issues. There's a disclaimer here, of course. This is just for educational purposes only. It is not financial advice. Seek professional financial advisors for that. We are only here to share our views and educate you on how we look at markets. That's it. And we reserve the right to the rights to this presentation that we use. Okay, so housekeeping matters. If you look at your screen, your interface with Zoom, you will see a Q&A button there, and you can click on it and ask questions at any time. We will answer the questions at appropriate junctures. If not during the presentation, then at the end of the presentation, where we can do most of the questions at the end. So that's it. Look around your interface, you'll see a Q&A and click on it for questions, right? To ask questions. Okay. So I am V. I am the founder of Track Record Trading Academy. I was in banks and hedge funds before moving on to starting this training firms. This Track Record Trading Academy was started to provide training to professionals. But before that, I was a professional investment a trader as well. I worked in London, New York, Singapore, Seoul, Korea, as well as Hong Kong in different offices. And I find that there's many uh, common methods, right, to generate alpha from the market. Hello, yes, Alex? No, okay, so that was just some interference. Anyway, I've been trading for many years, and eventually when I left finance, I started the trading academy to provide training to financial institutions, and then I modified those training programs, tailor them to for the retail sector, because I found that there's a huge gap in knowledge between the retail sector as well as the financial institutions. So that's where we are. And how I came to know Alex is he joined our first program, our boot camp in Gold Coast in Australia. I believe it's 2016, 2017. And since then, he's adapted the framework to his own trading. He has 25 years of global corporate experience in senior positions before he decided to become a trader himself. So he's now 15. He has 15 years of trading experience. He's adapted the track record risk framework for his own trading purposes, and he's come up with the program that's called the DayTrader Pro program. And later on, he will explain to us how he created the program so that you can also learn to do it yourself if you are quite experienced with your own trading, with your own trading experience, right? So full-time private retail trader, he is doing it full-time now, and basically he does it 1 or 2 hours a day, depending on the days that he's looking at markets. And as such, he calls himself a lifestyle trader, but he'll tell you more about that later on. So today we have to thank also our partners, right? Forex.com is a regulated broker with offices around the world, 24/7, 24 live support chat, and they will have a great offer for you as well at the end of this presentation. And also our partner in this MarketWise Asia. Some of you came through to this webinar because of the event you attended last week in Australia. So, in any case, how can you profit from this webinar? There's a few ways around this. You can do it yourself, right? Most importantly, we don't want you to be wasting time listening to us with nothing to show. You can use the methods that Alex will explain in a bit to create your own day trading strategy. So you have a framework where you can make your strategy work for you, work profitably for you, generate profits on a consistent basis. Or you can do it with us. You can sign up for the DayTrader Pro program. We'll tell you how to do that and tell you more about this program at the end of the towards the end of the presentation. And also, there's a bonus today. Alex will tell you how he is planning to take advantage of the current US monetary policy, the way that the environment that we are in now, the current market conditions has given him a long-term trade idea that he's already been executing for a few weeks now, and he'll tell you more about it at the end of the presentation. So today, the content of the presentation, we will talk about what is a trading system, quite simply what a trading system is, why do you need one, how to create the trading system. This is why you're here, to create the trading system. And then we'll tell you about the day trading system that Alex has created. So it's a background, the framework of how to create it, as well as if you don't want to create a trading system, you can just use our sign up and learn from Alex himself. And that's it. So what is a trading system? Quite simply, it is a set of predefined rules for buying and selling and managing trades. So with this set of rules, then you don't have to always second guess yourself. You don't have to make decisions on the fly. You can fall back on this set of rules. It is designed to remove emotions and improve your consistency. That is the critical element of success if you want to be a trader that is doing it on a consistent basis, right? You need to be able to have a system that removes emotions so that you don't have to be overcome by greed or by fear at different junctures when different headlines hit the news wire. So you can have this system based on technical indicators, price action, or fundamentals, whichever you decide to choose. It really doesn't really matter what you prefer, as long as it works. No one's going to question you on how it works, as long as it generates money on a consistent basis. So, and why do you need a system? It may be obvious to some, but it still needs to be reiterated that a system gives you the ability to be disciplined when you're trading. I think when we are talking about it in a webinar, over a conversation, over a beer, it's easy to say we are all going to be disciplined, right? Oh, this is what I set out to do. I want to not lose all my money. I'm going to make money on a consistent basis. I'm going to stop out. But that's not what happens in real life. If that's what happens in real life, then really most people will be very profitable in trading. But no, trading is a very emotional experience. There's lots of ups and downs, and that's why you need a system to help you keep you on the rails, right? Keep you from derailing, from getting off track and going the wrong way. So it ensures consistency. But why these two traits? These two traits are very important because it minimizes irrational decision making during trading, and it gives you clear entries and exits during times of volatility. And these days we live in times of unprecedented market volatility. Things change on a moment's notice, and it can revert back quite quickly in matter of hours as well. So you need to have a system. And how do you create your own system is the question that we want to answer here. So you need to have 3 questions addressed if you want to have a system that is sound and that will help you profit over the long run. So you need to know when to trade. When to trade is a question. I think some people don't even answer these questions. They just trade whenever they are free. That's not really the way to do it. Of course, you need to be free, but you need to have allocated time to trade so that you have optimal conditions that are suited to your lifestyle as well as to your trading style. And then when you've answered when to trade, then you can figure out what to trade, choosing from the times to what to trade, and then finally how to trade, right? Of course, this is the most important question. And I think most people just try to answer the how to trade, right? They just jump in, they assume that when and what is pretty much intuitive, but it's not, right? It's something that requires some reflection and some thought. So when to trade, first off, you have to identify a time of the day that suits your lifestyle, suits your work schedule if you're working, or even just your personal schedule, right? Because you have families, you have friends, you have things to do. You will need to know at least that there are three key market time zones. One is Asia, then Europe comes in, and then finally New York, and then we goes around the clock again. So you have to find the time that suits your lifestyle best. Some people trade whenever they're free, so it's kind of like inconsistent, not so suitable over the long run, because then you will not be great at any one time zone, right? So it's important to understand what tends to happen during which time zones. So what to trade is another question to be answered. You would want to trade. Of course, there are some people who specialize in trading inactive and illiquid trading instruments because they have some informational edge. But us being in retail trading is very, very, very unlikely to have informational edge no matter what you think. So it's best to keep to active and liquid in trading instruments in your preferred market time zone. And that will help you that will stop you from being victims of market manipulation, at least most days, right? Of course, now we live in the time of different US presidency kind of policies. So there's still informational edge if you're close to the administration, but that's not an average retail trader. So most instruments will have defined beginning and end and a middle to the trading session. Some trades 24/7, some like cryptocurrencies, they trade 24/7. But even then, there will be periods of lull and periods of high activity because of most participants are still human as of today, right? So other instruments tend to have no real rhythm, but most of them will have active periods, especially during New York time zone or during European opening hours. Okay, so you need to understand that. Then finally, you want to answer how to trade. You need a mechanism to identify and confirm a trend direction. We refer to trend direction because I think that's the best way to start trading. And in fact, it's the most profitable way to trade is to figure out the trend rather than trying to trade the noise. You try to figure out the trend. And you need to have a set of rules for defining when you get into the trade and when you exit, right? So entry and exits are very important. You should know them ahead of time before you get into the trade, and then figure out the size of retracements so that will help you. Once you get into the trade, you will know what is the logical stop loss levels, right? You cannot put it too close if it's a very high volatility instrument. So you need to know exactly what tends to be the market swings. Then you can have a reasonable stop loss, and then with that you can identify the size of moves and potential profit levels. And all this sounds easy with that slide. It's just a few things. It sounds okay. We're done. It sounds simple, but it's not that easy to do. Otherwise, everybody will have a system. So you have further on questions to ask: what kind of system, what kind of technicals you should be using, what asset class should you be trading, what time frame do you want to trade. Some people choose the time frame based on how the trades are doing. If it becomes profitable in short order, they are short-term trader, take profit and move on to the next day. If it goes into the negative zone, they keep it forever. I know some people who have held on to trades for years and it's never come back, but they still think that it's still a trade. They think they consider themselves somehow a long-term investor now. And very important, what size of trade is dependent on your capital base, right? You don't want to trade more than you can afford to lose. And also learning to deal with the emotional stress, and that is very important. It's very related to the size of trades that you're doing and the way that you're trading. If you have confidence in your system, there should be minimal emotional stress because you know that it will eventually work out, and you know that even if it doesn't work out, you're not going to lose too much of your capital. So with all this, then you can manage a trade once it's executed without having to rely on emotions, without having to rely on luck, without having to rely on prayers to higher powers that be, right? So, okay. So with all this, you will also need to know that you have personal time constraints. You need to fit your system around this time constraints so that you can have a healthy lifestyle, right? Okay, so then we now move on. Of course, those are very generic, very general questions, specific questions, but still not so easy to answer if you don't know how to begin. But with that, I'll bring Alex, and then he's gonna tell you step by step how he created his DayTrader Pro program, and how you can use his methods to create your own as well.
Thank you, Vee, and welcome everyone. Now, to those who I saw in Sydney last Friday at the live conference, welcome back again. Glad to have you with us again this evening. All right, so as the slide says, a step-by-step guide to creating a trading system. So what I'm going to go through is the exact same process that I went through in creating the DayTrader Pro program, which is a day trading strategy. And obviously, we'll cover the steps fairly quickly, but in reality, to go back and do the process, it does take several months worth of data that you have to check. So let's begin. Um, so as V mentioned, let's go quickly through the checklist of what we need to choose in order to create a day trading system. So first of all, obviously, you need to decide whether you're going to trade, which markets segment you're going to trade, and that's going to depend on your time availability and or your time constraints. So you have to decide, are you going to be active during the US session, during the European session, or during the Asian session? Once you've chosen the particular market you're going to trade, then you need to start to look at trading instruments that are going to be highly liquid within that market. So for example, if you're going to trade during the US session, then trading something like the ASX index, the Australian Stock Index, is probably not a great idea because it's not going to be one of the more liquid types of assets. So you have to match up the trading instrument that's going to be highly liquid during your particular market session. Now, once you've got that, we have to identify within that time zone, what is the average move? So if we try and allocate an hour or an hour and a half or 2 hours worth of trading at a particular time, then we need to understand on that particular trading instrument, generally, on average, how big is that move? Now, obviously, every trading instrument has different characteristics. It's going to move different. So the idea is really to focus on one trading instrument at a time and get an understanding of how big or the average size of those moves are, because that's going to help us determine those profit targets. And we will go through a real live example on the charts on how to go through this process. Likewise, we know once a move starts, it never continues in a straight line direction, up or down. There's always going to be pullbacks before it continues with the trend. So we need to, again, understand on that particular trading instrument, on average, how big are these pullbacks? So that will help us determine the appropriate stop loss level. And of course, we need some sort of momentum or trend direction indicator to help us decide whether we're going to go long or short on a particular trading instrument. And of course, once we have all that, then we need to put some criteria around how we're going to enter and exit that particular trade. All right, so let's actually go through the process. So just to go back, so let's make a decision. And we're going to say, for the purpose of this process and going through the process, is we are going to trade the European London session. Okay, so we've decided this is what we're going to trade. So once we've decided that, we have to sit down and have a look and decide what are the likely trading instruments that are going to be highly traded during that particular market session. So for example, if you're looking at stock indices, it could be the FTSE, which is the UK stock index. It could be the DAX, which is what I do with the day trading system. Or if you're looking at currencies, it could be the Euro USD, it could be the Pound USD. And so, in fact, for the sake of this exercise, we're going to select the Pound USD as our preferred trading instrument. So we've decided what when we're going to trade and what we're going to trade, okay? So next, it's about identifying the size of the average move. So here we are actually going to go to the charts. And this is the pound USD, okay? Now you'll see some vertical lines. Actually, before we go through that, let me show you. So on this, if you're not sure when in your time zone, when certain markets are open, you can go to this website, forex.timezone-converter. And so this is in Melbourne time. So you'll notice here in Melbourne time, the market centers in Frankfurt, Germany, open up at 6 p.m. Melbourne time. And London opens up at 7 p.m. Melbourne time. So we're trading the European session, okay? So just as a guide, which makes these vertical lines, this is the Frankfurt Open, the 6 p.m. Melbourne time. This is the London Open, the 7 p.m. And this third one is simply just 2 hours after the Frankfurt is open. So what you need to go through a process is obviously do some research. And so this is the pound USD. We'll just go through 5 or 6 days of October. And you have to flick through and say, okay, this is my preferred starting time. Now you can see here, during that first couple of hours, there are moves that happen. Obviously not every single day, but the moves are roughly, an example in this case, on this day, almost 40 pips. If we continue to the next day, have a look. Is there a move during the same time? Yes. So again, roughly, okay, in this case, 60 pips. Now, it's not going to happen all the time, right? This move here, 27 pips. So you start to see this move lower. There's a move here, 40 pips. So what you need to do, once you've selected that trading instrument, you really need to go back and minimum test 3 months worth of data, preferably 6 months, to try and get understanding, is there an actual move that happens? Again, not every day, because if I flick through another day, okay, there was another day here, 75 pips, but you'll get days that are more range bound, okay? So once you start to record this data, you'll start to see, okay, on average, not every day, but there's enough times during that market session where the market has a clear trend direction, and generally, on average, it gets 30, 40, 50 pips, obviously sometimes higher, sometimes lower. So that gives you a starting point that you know you finally identified a time that is suitable to you with a trading instrument that has specific moves. So this is what Vee was saying before. Certain instruments have an opening move, may struggle in the middle, and then have a closing move. So this is at the beginning. So we've now identified, as I said, this particular trading instrument has a move at the beginning of the session. So, as I said, somewhere between 3 to 6 months of back data to test that, to make sure that there's enough days in a week or over the month that you get these moves. So next, we need to understand with each particular trading instrument, what is the size of the pullbacks to help us determine the stop loss level. Now, with the DayTrader Pro and the way I day trade is, once I've identified the trading instrument that I want to trade, I have a fixed stop loss in terms of pips for every single trade. Okay, so this is why 0.4 is so important for me, in that by looking at it, I then predetermine that my stop loss is going to be 20 pips, 15 pips, or 30 pips, whatever, depending on the trading instrument, and it will remain the same. So how do we determine the potential stop loss? So let's go back to the charts. So we look at exactly the same charts as we did before, but this time what we're looking for, every time there's a move, okay, how big is that pullback? Okay, it's 8 pips. How big is the next pullback? 8 pips. All right. So on this particular day, or had a number of retracements, around 10 pips. So let's say 9, 10 pips on this particular day is the pullbacks. we'll have a look at the next day. So you're looking again at the same charts. How big is the pullback here? 15 pips. How big is the pullback there? 12 pips. So it's a process that you have to go through to determine how big these pullbacks are. So even here, a pullback, 10 pips. And you start to collate your data. So at the end of it, you'll come up with that most times the pullbacks will average, let's call it 12 to 15 pips. Okay, so we know on average, as a starting point, our moves in our direction could be 30, 40, 50 pips, and our pullbacks perhaps 12 or 15 pips. So we've sort of identified roughly some sort of average statistics. We then need to decide what indicators are we going to use to help us determine what direction that we are going to trade. Okay. Now, in this particular example, not that one, this blue line. Now, with the DayTrader Pro, we have our own proprietary indicators, which I'll show you when we get to it, exactly how we look at those. But there are many, many indicators out there, trend indicators, momentum indicators. So you can choose whatever you feel more comfortable with. But in this particular example, I've simply used a 10 exponential moving average. Okay, it is literally as simple as that. So that will help me. Let's go back to the. So, and what I would say is if price is above the 10 EMA, then I'm looking for a long. If price is below the 10 EMA, I'm going to look for short. It's really as simple as that. Okay, so we've now have our trend indicator that we've selected. And once more, you can choose. There are many different types of indicators. So those of you who have traded before, you'll feel more comfortable with certain indicators than others. So my advice is choose whatever you're comfortable with. Next is, how are you going to define your trade and entry and exit rules? So we go back to the charts, your entry may be literally as simple as this. After, for example, we decide we're going to start to look for opportunities once Frankfurt opens. That's 6 p.m. Melbourne time at the moment. It may simply be if we see a bearish looking candle, 5 minute, this is a 5 minute chart, so we're looking at very short term. We see a bearish looking 5 minute candle close under our 10 exponential moving average. It closes, we wait for it to close, and we simply take a short entry. So it can be as simple as that. Now, with respect to exit rules, as I said, my approach is I have a fixed stop loss in terms of pips, and we'll go through parameters in a second. And so it becomes quite easy in that I've entered the trade. If my potential stop loss, not potential, if my stop loss, fixed stop loss is, let's call it 15 pips, I simply add 15 pips, and then we manage the trade, and you look for at least a 1 to 2 risk to reward, which is what we do with the DayTrader Pro program. So again, if your stop losses are fixed in pips, your profit target is also fixed in pips. All right, so we've gone through that process. So let's just summarize what we've decided to trade in order to start testing to see whether it actually provides an edge for us. So we've decided the market that we're going to trade is at the beginning of the Frankfurt Forex market open from 6 p.m. Melbourne time. We've decided we're going to trade the pound USD. The time frame that we're going to use is the 5 minute chart. And we've identified we can use both. Average size of the move is somewhere between 30 and 40 pips. So let's just say we agree it's going to be, for our initial testing purposes, we're looking for a profit of 30 pips. And therefore, our stop loss, the average size of pullbacks, we've decided is going to be 15 pips. So that's going to be our stop loss with a profit target of 30 pips. So that's our starting point. So then what you need to do in order to test it, to see whether it has an edge, whether it does give you significant returns. Last point, entry conditions. So our entry conditions are simply going to be, as we saw in the charts there, if we get a 5-minute close back below our 10 EMA, then we are good to go. But you can have other entry conditions if you feel more comfortable. Could be a break of a key level. But my suggestion is just to keep things very, very simple. So we have some parameters for testing. So once we have those parameters, how do we measure it? Well, first of all, you go back, you know when your starting time is, okay? You know what your stop loss, you know what your entry criteria is, you know what your profit targets are. You go back and you test historical data. So you need to go back at least a couple of years to test whether with those parameters, it actually delivers a result and to what extent. Okay, so you need to keep a journal. So even though your profit targets may be 30 pips, you have to record if the move continues higher, that will record that the ultimate move, yes, actually was 40 pips or 50 pips. Because once you've collated data, maybe the 30 pips over a longer period of time is too small of a profit target. Once you've tested at least 12 months of historical data, you need to then test it under real live market conditions. And obviously you will start with a demo account first. If you're happy with that, then you would obviously go to a live account with a small amount of capital and then gradually increase your capital once you feel more comfortable and you've got some results on the board. Now, this testing on historical data takes time because, first of all, you may start off with one trading instrument and ultimately you may find there's not enough days during the month where there's actually a trend at the time slot that you want to trade. And so you need to look at another trading instrument within that time zone. Once you've found that, as we said, our initial parameters were 15 pip stop loss and a 30 pip profit target. You may find if you record this data, then you may find that on average, you may get better results by having a tighter stop loss, let's say of 12 pips, and having a profit target of say 36 pips, a 1 to 3 instead of a 1 to 2. So it's about collecting this. So this first part of backtesting on historical data is very, very important because it helps you redefine or amend your initial parameters to give you the maximum results. So for me, that process actually took me 6 months until I came up with the trading instrument and the exact parameters around that trading instrument. So there was a lot of testing to do before you actually went live in that market. Okay, so obviously once you've gone live, you need to monitor the system performance constantly just to ensure you do remain profitable because market conditions do change. And by monitoring it, there may be times that we need to adapt to it. Now, I know, for example, I think April or May this year, when all the new tariff on the Trump started coming out, the volatility increased 3- and 4-fold. And so we had to, for a while, adapt our stop loss levels 3 or 4 times higher to allow for that volatility. And gradually we were able to reduce it back to what it was originally. So it is important to monitor the performance and understand what's happening in the markets. All right, so let's talk about the DayTrader Pro. So what does it work for? Well, I trade the DAX, which is the German stock index, which incorporates 40 of the major German blue chip companies. Now, depending on your broker, on your platform, it could be DAX 40, ticker, or GR40 or DU40. It's all the same. Now, obviously, different brokers will have slightly different price spreads. It doesn't matter. You just apply the rules to your particular trading platform and your pricing. It doesn't matter what price you actually get in compared to another broker because we do have fixed stop losses, as I said, in terms of pips. But it can be adapted for other markets and other times, so other trading instruments and other market time zones. So what are the key highlights of the DayTrader Pro? Well, first and foremost, it's got very clear and simple trading rules. So there's a trading plan. It's very simple to follow. I think there's 5 or 6 steps that we need to abide by. And it's simply rinse and repeat, 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 repeat on a daily basis. So within it, we now have 2 strategies. One is based off a 5-minute chart, and the new one that we introduced in June of this year, based simply off a 1-minute chart. So we have 2 daily trade opportunities. So our restriction is that we only place a maximum of 1 trade per trading strategy per day. So whether it's a winning trade, losing trade, and sometimes break even, sometimes there's no trade, we do not re-enter the market again on that strategy. So it's a great way of ensuring that we don't overtrade or revenge trade. So it's the same time every day on the DayTrader Pro, which is 9 a.m. Central European time. So that's basically London open also. And that's at the moment 7 p.m. here in Melbourne. And I have a cutoff time of 90 minutes. So I allow myself 90 minutes of trading per day. And if we don't get a setup within those 90 minutes, we simply back up and walk away. So I know that at the same time, every single day, I need to allocate 90 minutes. Now, this time frame suits me, suits my lifestyle, as I said, but the system can be adapted to a more suitable time, depending on your lifestyle availability. Now, we have a 1 to 2 risk to reward, so risking 1% to make 2% on our trades. So we only need to be right generally 34% of the time in order to be profitable. So even if we get less than 50% of our trades correct, we still over time will end up with a positive results. Now with the DayTrader Pro, we do live trading sessions with me twice per week. So it's not just an education program where we tell you the rules and this is how you should do it. You actually get an opportunity to live trade with me. And also in addition to that, at the end of the week, because we're trading the same way every single day, according to the same rules, I do a weekly review video. So on those days when there's no trading session, you can still go back and look at the weekly review session and see how the trade should have been entered if there was one. Now, put this point in, trade management is optional. So when we first started with the DayTrader Pro back in 2023, there was no trade management. Once we enter the trade with a stop loss and an entry profit target, we just left it. So it was either going to hit our full profit or it was going to be a losing trade. And then in late 2024, at the request of clients, some prefer to have some sort of management process put in place. And that simply means that at a certain point in time, if your trade goes into profit, a certain level, we'll bring our stops to break even. If it continues going in our favor, we then lock in a one-to-one risk to reward profit, and then ultimately the final profit target. So we did introduce that in late 2024 as an option, and we have continued in the live trading rooms to take the trade management option simply because most clients feel more comfortable with that process. But I say it's optional because at the end of the day, over a 12-month period, there is a very, very little difference between the results of whether you've trade managed or you've left it alone. Key here is consistency, either do it one way or the other way. All right, so just to quickly before we go into and I show you the actual setups, obviously some day trading issues that people struggle with day trading and what the solution is. So generally a lot of retail traders, when they begin day trading or those 1 5-minute charts, they generally don't have a lot of times a defined strategy or a trading plan. So clearly with the DTP, as I mentioned earlier, we do have very clear and precise trading rules. A big issue for a lot of retailers is emotional trading, over trading, revenge trading, fear of missing out on the continued run. And so the way to avoid that, and to be quite frank, this is one of the rules that I put in place to help me. As traders, we need to understand what our strengths and what our weaknesses are. And obviously, we want to structure a system that plays to our strengths and reduces us with our weaknesses. So simply by having 1 trade per day per trading strategy, as I said, two trading strategies, we certainly, as long as you stick to the rules, we avoid the over trading or emotional trading. A lot of traders also, with day trading, don't have any risk management. So we have a 1% risk per trade with predefined stop loss. So worst case scenario, we have, as I said, maximum of 2 trades per day. Worst case scenario, we can lose 2%. Most days we only place 1 trade, so at risk only 1%. Now, particularly with day traders, a lot of day traders will place 10, 15, 20%, 20 trades in the market at any given session. And if you're risking even 1% or 0.5% on 15, 20 trades a day, and market is against you, you could potentially lose quite a large portion of your capital very, very quickly. So we address that within the DayTrader Pro. We focus on asymmetric returns. It's more important that our wins are bigger than the losses. A lot of traders, when they first begin, really focus on the win. And in essence, they do the exact opposite. They take a small win of $100, but they're happy to let their losses run to $200, $300, for example. So it's not about your percentage, your win percentage. What's more important and what we focus on is those asymmetric returns, because as I mentioned earlier, with a 1 to 2 risk to reward, we can be wrong 50% of the time and still end up profitable. What to trade is a big issue for day traders, or a lot of retail traders, not just day traders, is that, and I used to be one of these as a swing trader. I used to look at 15, 16 different trading instruments looking for trading opportunities. And what I found over time is by focusing on one trading instrument, you learn to master that, you learn the characteristics of that trading instrument, and you're going to make far better choices and entries and results just by focusing and mastering one. So what we want to be, or what we don't want to be, is a jack of all trades and a master of none. We want to master a particular trading instrument, which is going to give us much better results. A lot of people, also retail traders, struggle with routine and discipline. We have the same rules. We trade the same time every day, 90 minutes max. So it's really absolutely routine, as you would have a morning routine. You get up, shower, brush your teeth, have breakfast, or whatever you do. And this is exactly the same. So by having that routine and discipline, it provides consistency, and consistent approach gives you consistent results over time. And obviously, with whatever trading system that you have, you need to be comfortable that it has an edge over a period of time. And so with the DTP, which we launched in April 2023, we've had for the years positive results overall. They will vary from year to year because market conditions change, and that's another indication that the system has an edge. And there will be times within a year, market cycles will vary. They could trend, they could range, they could be in a retracing, that could be in breakout. And whatever strategy that you use, this is important if you're creating your own strategy. You have to understand that even if your strategy has an edge over time, there will be certain times within a market cycle where will be extremely favorable towards your strategy. But on the other side of the coin, there will be market conditions which are going to be not so favorable. So what is important is that during those unfavorable times is to minimize the drawdown, but ensure that over the course of the 12-month period, your system does provide that edge. All right, so this is an important component in that whatever system that you have and you plan, it has to be systematic. And so what that means is that you need to be able to map out your system. If you can't map it out, it's not going to be systematic, okay? So this is the DayTrader Pro. This is the flowchart of my particular system. So generally we trade every single day, except like tonight, before FOMC announcement, and tomorrow night before an ECB announcement, or if there's a public holiday, we don't trade. So we simply check the economic calendar. Is it a trading day? Yep. So we start our trading session. We double check. And if you're creating your own system, do you have the trading plan in place? If no, well, then you implement the trading plan. Obviously, I do. Next step, I have to update my chart. So I update on a daily basis before my setup, key support and resistance areas also. So my next question I ask, have I updated the charts? If it's no, well, then I update. Then we go back, update the charts, yes. Then I can start to monitor the charts for my setup requirements. So we continue monitoring. I have a cutoff time of 90 minutes. So whilst I'm monitoring, has my cutoff time been reached? If it's yes, it's simple as that. I finished the trading session, okay? If I'm still within my trading session time, has my initial criteria trade setup criteria been met? If it hasn't, I continue monitoring and monitoring. If I've reached my 90-minute limit, I'm out. Otherwise, I keep monitoring. If my trade setup criteria, and I'll go through this on the charts, been met, then I need a final confirmation of entry criteria before I can enter. So has the entry criteria been met? No. Then we keep going around in cycles until it is. Once it is, has the trading session cutoff time been reached? If it has, well, bad luck, we don't enter. If it hasn't, we enter the trade with the stop loss and profit target. And then if you're managing the trade, you manage it as per your rules. And if you're not managing the trade, finish up the trading session. So very simple step-by-step. So if you follow your trading plan and you can map it out, it simply means you're going to take a consistent approach every single time, which is absolutely critical. All right, so let's go through the actual setups and explain how simple it is. So first of all, this is the original strategy. We start off on the 5-minute. This is the DAX at market open, which is 7 p.m. now in Melbourne. So these are the two in our proprietary indicators. So they are both a combination of directional and momentum indicators. So what we're looking for is, first of all, that we need the two indicators to align. So we want both of them are green. If they're both green, it simply means we're looking for longs. Okay, if they were red, we'd be looking for shorts. It's important that both are green. Okay, so we know that both are green. We give the markets 10 or so minutes to settle down. These are 5-minute candles. And then we simply need, because we're looking for longs, we simply need a 5-minute bullish candle. So as you can see here, a nice looking bullish candle. Now these are the vertical lines I was referring to. These are my support resistance lines that I update before I start the session. And obviously in the program, you'll see how it's done. But it's simple as this: looking for longs, 5-minute candle confirmation. Once we've got that first confirmation, we get moved to the 1-minute chart. And from there, all I'm simply looking for is a 1-minute candle confirmation. I'm still having both indicators green on the 1-minute. There's our 1-minute bullish candle confirmation. So that was the end of our 5-minute candle. Okay. 1-minute bullish candle confirmation, we enter, and this is the move that we're looking to catch. We're not looking to catch a big move. So it is literally as simple as that on the 5-minute. Now, we introduced the DAX 1-minute in June of this year. Why? Started to see, and again, by simply focusing on one trading instrument at the same time, we start to notice things. Okay, so I started to notice that we were seeing moves in the market, but we weren't able to capture them or it according to our DAX 5-minute trading rules. And so we introduced this additional strategy. So it happens at the same time, same indicators, and it's a very similar approach. So market open, what we're looking for initially is the two indicators to be the same. So in this case, at market open, we had a discrepancy. We finally got both the same. So we started to look for shorts. That's our trend direction. And once we get a new trend direction, governed primarily by the top indicator, we simply need our bottom indicator to go in the opposite color, which signifies our very first pullback, which is what we see here, since the change in trend direction according to our indicator. Once we have our first pullback, we simply wait for the two indicators to align one more time, red and red, together with a bearish candle because we're looking for shorts, and we look to capture this move lower. So once more, a very, very simple approach indeed. All right, Vee, I might hand it over to you briefly.
Okay. So here is what our clients say about the program, right? Mr. Richard said that it's live theory plus practical course and a format that helps students see and experience exactly how Alex day trades, and it's quite simply and very systematically. And Matthias, also a strong supporter, says that in a very relatively short period of time, he in trading a very short period within a day, trading within a day, still achieved quite impressive results, and we'll see the results in a bit from Alex. And Jason says that he's only learned to trade only if the setup appears, which is what Alex was showing you in his flow chart, that you have to ask the questions repeatedly. And if the setup appears, then you execute the trade. Otherwise, you just sit and wait for it to appear, and then let the probabilities that are skewed in your favor to create the profits for you. So you'll still have sometimes losing trades, but over the longer run, you will have positive outcomes, right? You will tend to make more money than the times that you lose. So Esther says that the trading system was very systematic and easy to follow, and the instructions are clear, right? And Mr. Lee, he couldn't express enough gratitude to Track Record and Alex for this program, and our dedication and expertise have truly transformed his training experience. So don't just listen to us. Take their Don't just take their words for it. We will ask also Alex to tell us. It's all well and good what people say about us, but what are the results? What are the numbers that we've registered so far? Yep. So how did the DTP decks do over the years that since you've created them?
Okay, so as I said, we launched it in April of 2023. Obviously, you can see on the bottom the net results very, very different. Obviously, positive over the 12-month period. Now, obviously, you'll also see a few red months, and particularly the last 3 months. So this is what I was saying earlier, is that even though whatever trading strategy ultimately that you use, as long as it has an edge, um, it's going to perform different under different market conditions. So the market has a cycle, as I mentioned earlier. So there'll be a time in a market throughout the year which is very, very favorable to your system, and you want to generate as much profit as you can. And certainly, there's on the flip side, there's going to be market conditions that are going to be not so favorable, where we do expect some sort of drawdown. And obviously, the last 3 months in 2025, we've certainly been experiencing that. But we're not looking at 1 month or 2 months of results. You need to look at the bigger picture. So clearly, the edge is still there over the 3 years, because obviously market conditions have been very, very different in 23 versus 24 versus 25. So obviously important, some statistics, because even though they're profitable, there is going to be losing trades. And you can see in all the years, there are a significant number of losing trades also. And there will be times when you will have a string of losing trades. And so that's just part and parcel of trading. And it's just a fact of life. We have to accept it and make sure that we have enough structure within our systems to minimize those drawdowns when they do happen. All right, so what do you get in the DayTrader Pro? And just a reminder also, before I go through this, I will at the end of it show you a Nasdaq trade, daily Nasdaq trade that I'm sure a lot of you are waiting for. But so we will get through that. We'll go through in details, and I'll tell you exactly how to enter it and what to expect. But before we get there, so with the DayTrader Pro, what you will get, you'll get 29 training videos that you can watch at your own leisure. They will range from 5 to 10 minutes, but that's the core material that is available. You'll get 5 additional bonus videos on the Euro USD, Eurostox 50, and alternate trading time. So I mentioned earlier that the system can be adapted to other trading instruments and other trading times. And so for the first part of 2025, just to show, we actually were live trading the Euro USD at the same time as the DAX. And then we showed that we can trade also the Eurostox 50. And then we actually introduced a second trading session towards later in the London session, also to highlight that both the DAX, the Euro USD, and the Eurostox 50 can be traded at different times also. So there are 5 bonus videos that go through with the rules and the parameters exactly with that. Obviously, from June 1, we've introduced the 1-minute strategy, so that's there as well. We've got the live trading room twice per week. we've got our proprietary indicators that you saw, the red and the green. We give you all those indicators to upload. They're yours forever. I give you the chart templates and profiles for both MT4 and MT5, so you don't have to set anything up. You just load them on. We give you our risk calculator, so to ensure that you calculate the correct volume according to your risk, 1% based on your account balance. I give you a template, a trading journal template. So we actually record, well, I record, and I hope our current clients record their trades every single day. So it just keeps track, and then we go through a review process of that journal. And what's also important is I do weekly review videos. These are basically the setups for the week. Even we cover, again, the ones we did in the live trading room, but also those days that there is no live trading room. I go through and we guide you through the setups if there were for that particular day, because once more, it's same trade rules, same time, same setup, everything's the same. So very, very easy to follow through. And we also provide a trading calendar just to let you know when the live trading rooms are in case there's a change, and also highlighting non-trading days, which happen like today because of the FOMC and tomorrow the ECB. We don't trade those days.
Okay, who is this program suitable for? It's for people uh, who have see a bit of a lag here. For those who are starting out to trade, it's good to get onto the right track from the very beginning. You want to at least learn the fundamentals from the right people, and for the people who have been successful. For example, Alex, who has made all the mistakes in his past few years, but years before he's created his day trading program. So you don't have to struggle. You just have to follow his path. Experienced traders who have difficulty becoming profitable, I think experienced traders who continue to trade, but it's because that you find that there are times where you can make money, but of course there's unfortunate times where you also lose money. But if you think that you want to be on the right path, you want to get a system that works for you over the long run consistently, then this is something for you. And for any traders who want to enhance their trading process, because by learning how to do it systematically, you can make sure that your trading process will be systematic and will endure and will stand will be able to withstand the changes that that the markets experience over long periods of time, right? And there's market conditions that changes, but if your system has the sound trading principles embedded, then you will always be in a position to profit when the times are optimal for your system. And when it's not, then you will have limited losses, much like the track record the numbers that you've seen from Alex's track record in the previous few slides. So that's where we are, who is suitable for. And if you think it's suitable for you, then of course the natural question is, how do you sign up? Yes, you can sign up with what you get. Let's see what you get before you want to sign up, right? You get a nearly 300,000 Sing dollars worth of package where it includes the indicator that the proprietary indicators that Alex has created. You will have lifetime access to it. You can download it. We'll send it to you, and it works for Meta 4 and MetaTrader 4 and MetaTrader 5. It's all yours to keep. And bite-sized training videos, you can watch them anytime, and you have lifetime access to it. And if there's any changes to the strategy where, for example, at the beginning of Trump's second administration, volatility was way higher. Alex made some adjustments to the parameters for the trading, for the trading entries and exit. You will also have access to that for the rest of uh, the time that he's trading, right? You have lifetime access to that. So as long as you sign up once, any updates you will receive them, and you will get a notification on email as well. And there's 2 live trading room sessions per week for 6 months. You have access to that, and by that time you should be able to be quite independent. You can trade by yourself, without Alex's guidance, but if you want, you can continue the subscriptions as well. But this is lifetime access for the training videos, 6 months access to the live stream sessions every week. So you can tune in, talk to Alex, listen to Alex trading live markets, and you can ask questions and he'll answer them at appropriate junctures, because not all the time can be answered when the markets are moving, right? But not just that, you also get bonus. One bonus is you have lifetime access to 12 months rolling of the previous uh, weekly trade review recordings, and you have live trading room sessions. So this weekly review recordings are for the days when there's no live trading sessions. So you will not be trading by yourself in the dark even when there's no live trading sessions. Alex will record a review session at the end of the week that goes through the sessions that he didn't stream. You can compare your performance with his, compare your actions with what he did, so you can adapt and learn faster. And the second bonus is a 6 months track record membership for new clients only, where it includes premium podcasts, our traders chat forum, access to our track record model portfolio, and my live trades as and when it occurs. So all these are worth a combined total of 4,430 Singapore dollars. But for this, but we're listing it at $2,898. And for this webinar, you have some exclusive discounts. For those who sign up before 4th of November, you get a $500 discount with this coupon code ForexCom, and that gives you the promo price of 2398. And there's an additional bonus if you open a forex.com account, and you can get an additional rebate of 500 Singapore dollars from us. So the result, the price is 1898 Singapore dollars for lifetime access to the training videos, 6 months live trading room sessions, and you can sign up with this QR code on the screen, or you can click on the link there and sign up. And this comes with a money back guarantee, where there's terms and conditions applying, but basically it's that if you do at least 13 trades within the 6 months period of the live trading room sessions and you still end up unprofitable, and you prove that, show us a broker statements for that, and you don't lose money on other things, then it's because of us, then you get all the money that you paid to us, you get it all back. There's a money back guarantee. You can try this program for very little risk, and hopefully we will see you in the live trading session soon. Okay, so that's the offer. And now Alex will tell you about how to take advantage of the current monetary policy, the trade that he's doing with Nasdaq. And then later on, we can have a Q&A sessions if you have any questions, and you can ask us more about the program.
Thank you, Vee. All right, so as the title says, how to take advantage of current US monetary policy. Well, this is actually, I have to give credit to Vee. This is analysis and research that Vee has put together that has enabled me to put a strategy, a trading strategy together. So obviously we know in September, the Fed has finally started cutting interest rates. In fact, we expect another interest rate cut later or early hours of the morning here in Melbourne. But bottom line is cutting rates when stocks at all-time highs. What happens next? So this has happened in the last 16 times when the Fed has cut interest rates and stock indices have been within 1% of their all-time highs at that time. Then a year later, the stocks were higher every single time by an average return of 15%. Okay, so we've just started this particular cycle. So this is what we're looking for. And what I'm going to show you is on the Nasdaq how to trade this. Now, just before we go to a live chart, so this was the first Fed rate cut in September, mid-September. Now, we all know that markets don't react on the actual rate cut. They start to preempt that there's going to be a rate cut and a move. So the move starts quite earlier on. So that was the move that started with the rate cut. And then we've seen it continued. This was Trump tweet. So we had a big drop, and then markets have now picked up, and now we're expecting a rate cut. So this is what we're looking to take advantage of. So how do we do that? So let me go to the charts. All right, so we'll take it a step back. And so what this white indicator is simply an 8 EMA, so an 8 exponential moving average, okay? And so what I'm looking for here is these are daily candles, so you only need to review it for a minute or so at the start of each day and make a decision. But what I'm looking for is after the market has dropped below the 8 EMA, I'm looking for a bullish candle close above that. Now, if we knew of this analysis previously, if you had that information, and you know that markets start to move in anticipation of a rate cut, and we know what's happened. So in theory, once this would have been, I might just change, leave it at green. So that would have been, in theory, the first possible entry that in anticipation. So these markets were close to an all-time high. In markets had already started to price in almost a certainty of its first rate cut. So this was the first opportunity to enter the trade long. Okay, we'll look at the entry signals first and where the opportunities are. And so if you missed that entry, then I would not be looking for an entry until we had a close back under it. Okay, so in this case, if you'd entered there, you had the opportunity to basically ride up almost 1,000 pips through that. So this is what we're looking for. Ultimately, we're looking for 2 or 3 times a year where we are going to get a significant run higher, where we can get 4, 5, 6 times our risk to reward. Most days, most times we'll enter, might be a break even, we'll get to that, or a 1 for 1, but we're looking for 2 or 3 times throughout the year where we can pick up 5-6% on the trade. And so it's a nice little add-on trade. So if you miss that, your next entry would have been this at the close of this candle here. So we had a close back under the 8 EMA, and we'll talk about stop losses in a sec, but I just want to highlight the entry signals. All right, so we had a close back under here. Then our first daily close back above the 8 EMA. So you want to make sure it's a flat top or a very small wick on the top as a bullish candle, and then you have the opportunity to ride this up here, okay? Then obviously the Trump tweet, we're back under. Now, this I would not act upon because it's only marginally closed above. So we want to make sure there's a decent part of the body back above the 8 EMA. This candle here, it's got a large wick on top. So that is not a very confident bullish candle in my perspective, even though the body of it still closed back above the 8 EMA. So this would be then the next entry. That would have been a short ride. And the last one that I'm currently in is actually I entered off this at the close of this candle here. And I'm currently fairly well in profit on this. So that's the entry signal, okay? Now, 2 other things to talk about. First, the initial stop loss. So we don't want proportionally large stop loss because what we're anticipating is that if we've had a bullish close back above our indicator, the 8 EMA, we are anticipating that price is going to move higher, okay? So the last thing we want to do is put such a large stop loss that it's not going to give us that risk to reward that we're after. So comfortable enough to have a tighter stop loss, meaning, okay, if we get a direction wrong, it's either going to go high the next day or it's going to reverse. So if it's going to reverse, we want to know as quickly as possible. So what I would be doing on entry, I'd simply be putting the stop losses just above, not above, just below. I might make that red. Just to give it some discrepancy. Simply below the bottom of the candle that we entered. So if we entered this candle, I would have my stop loss there. Our next entry was this candle here. For that entry, I'll be placing my stop loss, initial stop loss there. So obviously you calculate your volume according to that. So with this, so let me get rid of this one for the moment. That relates to that. So that was our next entry. Now, to put a stop loss at the bottom of the wick, I mean, that's just a huge, huge move, right? So we need to be a little bit more sensible about it. We don't want to have a tight stop loss. In fact, I took this trade also. And what I did is I placed it just under here. So a little bit more logical, not as big as this, but certainly there seemed to be a clear area of support across there. And then on the final one, this entry here, the stop loss will simply go, in this case, somewhere along there. So that's the original stop losses that we want to place in the trade. Let me get rid of those now. Now, obviously, what we want to try and do is fairly quickly bring our stops to break even. Okay, so as the trade moves in our favor, so if our original stop loss was there, I'd always be looking to adapt the stop loss as price starts to move up. So that was our entry, but always have the stop loss on the underside of the 8 EMA. Okay, so I'm happy to leave it run for 2 candles. So if we get to this candle here, happy to bring a stop loss to the low of the previous 2 candles. So you can use that as a guide. Right, every 2 candles you keep just adjusting it higher and higher until you gradually get to break even. So we want to reduce that risk as quickly as possible. Obviously, we don't want to choke out the trade, but we need to keep adjusting even as we go in profit, and that will depend on each individual. So here you've got to also take into account, understand what's happening in the US in the coming night. So is there a major news? Then you may want to tighten that stop, for example. If there's no major things coming out, then you maybe use simply the two candle low of your stops and just keep moving that. Now, ultimately, you may simply, once you got to break even, it's entirely up to you how you manage it. You may say, look, I'm not going to, once it's a break even, I'm comfortable. I'm happy for it to be more range bound. Once I get, for example, a 1 to 2 risk to reward, I'm then happy to bring it up and lock in a 1-to-1 profit target and so on. So it is important that you do adjust your stop losses as you go into profit, because things like this will happen with Trump tweeting. So it is literally as simple as that. Okay, so that is it. If there's any questions, obviously with respect to the Nasdaq trade or other questions on the DayTrader Pro, happy to address any questions together with Vee.
Yes, Alex. So some feedback from you from Kathy. It says it's good. Please let her know if there's next webinar. Anyway, there's a question from a participant here. How does the DTP handle losing streaks or quieter market conditions?
Okay, as I mentioned earlier, we're going through that cycle at the moment where conditions are not so favorable. And so what we've done, particularly in the last couple of weeks, is in order to minimize our capital and wait for things to market cycles to change and become more favorable, that we have the opportunity, obviously, to place up to 2 trades per day. So if we take the first trade and it ends up being a losing trade, then at the moment we've made a decision not to trade the second trade, just to keep our capital and preserve our capital until market conditions are better. Obviously, if the first trade is a winning trade, happy to take the second one if it comes on board, or even if the first one's a break-even trade, we'll take the second one. So we do manage our risk. So our maximum exposure at the moment is simply 1%. So that enables us to continue trading until such time as the market conditions become more favorable, and they will, because it's just a cycle that we're going through.
Yes, you've mentioned 1% risk per trade. Why is the level so important, and what happens if traders risk more than that?
Well, this is one of the common problems with particularly if day traders or scalpers. They might say, look, I'm only risking 1% per trade. But if they have no restrictions in terms of how many trades they can place in a given session, if you're placing 5 or 6, 7 trades in a session, even though you're only risking 1%, potentially you could be down 7, 8% in one day. And before you know it, you've wiped out your account in, a week or 2 weeks. So the 1% enables us to survive the when we're struggling, so to speak. Because in essence, we've got to have 100 losing trades in order to wipe out our account. So it keeps us in the game, in the market, until such time as that we can take advantage of the conditions and start to generate decent returns.
Okay, a follow-up question here. If I have a small account, does it make sense to trade with 1% still?
It's entirely up to the individual. Obviously, depending on how small it is, what is important, I'll say this, is that it's not, if you're going to be risking, let's say, $10 per trade or $5 per trade, there's no real incentive to follow rules. So you've got to look at it in terms of dollars. So you've got to find that amount in dollar terms that is a balance between it's big enough to making sure that you're going to stay disciplined and follow the rules, but it's not too big where it's you're not sleeping at night. So if you've got a small account, then maybe 1% is you can trade a little bit more than 1% because you obviously you need to make some money and then you just keep compounding it gradually. Wouldn't risk 10%, but you can risk 2 or 2.5% until things the account starts to grow, and then you can slowly wind down that percentage.
Okay, cool. From another question here, I can take it. It says, I do not have any background in trading. Does DTP suit me? Yes, as I mentioned in the slide earlier, where it says who this program is suitable for. It's especially suitable for you. If you don't have any background in trading, then you need to get started on the right track. Best you start with someone who has figured it out and has the discipline to and a system that will help you become disciplined and become consistent. So this trading system not only allows you to be profitable with DAX, but it also allows you to adapt to that is using the system. You can trade other instruments as well, as long as you have the same framework, same risk parameters and all, right? So it's a good way to start out if you have no trading experience. I guess we have time for one more question, just one more question. Here is the question that we get quite often. The indicator package, the indicators is for us to keep forever. Yes, it's something that you can download into your own MetaTrader 4 and 5, and it's for you to keep. And if we have any updates, we will also send it to you because you have lifetime access to the training program.
I think
I
with
guess
that, it's just
that's
important to note that there's actually, if you're not even familiar with Meta 4, Meta 5, part of the course package is we show you an instructional video how to copy that or upload that into MT4 and MT5. So there are very clear instructions on how to upload everything into the platform.
Yes. Okay. So with that, if you have any further questions that you need to ask us, you can drop us an email at info@trackrecordtrading.com. The link to sign up is there. You can click on those link and there will be a place for you to ask questions as well. And use the QR code, use the link, use the coupon code to get the $500 discount and open a forex.com account to get an additional 500 discount for a total of 1,000 total discount off the list price. As always, thank you for your time. And if you're trading, always stick to your trading process and eventually you will be profitable. Thank you. Thanks, Alex, for your time. Thank you, everybody. Hope to
Thank you,
see you
everyone.
again.
Have a good
Bye-bye.
night. Bye-bye.